Alright, well, folks, I'm streaming this to show you a breaker live in action. We are looking at the NASDAQ futures on the 15-minute chart. You can see I have a green box basically drawn across the screen. It says 15-minute bearish breaker. So we come over here, as I explained it the other day. Oh, it does this, and I hate it when it does this. We gotta. There we go. Okay, so we're here to that low, high, lower low that I was talking about. The low being the low of the green candle, the high being the high of the last green candle, and then the lower low being the drop off, basically. So whenever you have that motion in play, you will have a breaker. And as you can see, I have the 15-minute breaker just put off as this green candle. And lo and behold, whenever you are, after, let me see, how long did this take? Let's see. So it took from Thursday. Looks like that's when the big drop off happened. I forgot what news drove that, but there was some news that definitely drove that. But today, election day, I'm guessing it's the news driver for what's driving it up. Drove it up and above liquidity here. I'm still not all the way zoomed out in. Am I? No, I'm not. Okay. So yeah, it looks like it drove above the liquidity point here. So we'll get into entries and all that at some point. But yeah, so I was checking on X. I did see that my mentor did trade. If you look on X, let's check on Inner Circle Trader. He was shooting, I think, I'm pretty sure he got it exactly what he was shooting for. I think he said 238. And he entered somewhere down in here. But yeah, I didn't trade today. I woke up and just started looking at the markets and seeing what I could analyze, and found the 15-minute breaker, put it on here, and yeah, as you can see, we have touched it, the bottom of this breaker, which I think is the price of 20,372.25. Oops, okay. And then, so now the high right here is 20,372.75. So it went into it about 50 cents. 20,371.50, so just below it. 20,370.75, so just below it. 20,368.50, so just below it. So as you can see, it just keeps trying to come up and come up and come up, but it keeps failing to break through this. I guess that's why they call it a breaker. I'm not exactly for sure why they call it a breaker, but after I said that, it sounds good to me. But yeah, it just seems like that is the point of resistance. It's not like it's going to be the high right here, as most people would lead you to believe. Let me see if I can. Yeah, most people would let you believe this high right here would be a resistance point, because there would be equal highs. Well, if it does get to that high, it probably would pull back to leave liquidity there, right? Again, something I talked about in my video yesterday. That is the point to where people would put their buy stops and sell limits. Usually it runs through a liquidity point. Like a high like this would be a liquidity point. And as you can see, after it ran through it, it did drop down below it, and it kind of spiked up and down, trying to get people to chase price, basically. And then after all was said and done, it just continued upward until it hit the breaker. So this is smart money at play. It's the easiest way I can describe it. This is the markets manipulating the charts in the way they know how, and the way I've been taught to look for it. And this is how you look for it. You see a high, you know that's where liquidity is, because again, that's where people put their sell limits or buy stops, thinking that it'll get up to this, it'll be a a point of resistance, is what they think it'll be. So it does act as a point of resistance for a little bit, or it just kind of goes up and down, making people kind of guess what they're doing, especially if they have buy stops and they think it's going to be a runaway. They put their buy stops, it goes up, then it comes back down. They think they've lost it, they get out of the trade, and then what does it do? It runs back up. Or they put a sell limit in, it does sell, then all of a sudden, what does it do? Run back up and takes them out of the trade. So either way, you're screwed if you do, you're screwed if you don't. So that's why you got to look out for these liquidity points, with highs, things like that equal highs. But yeah, even just one high like this would be a liquidity point, because again, that's where people would have their limit set, whether it be a sell limit or buy stop. And then again, acts just like it would, like it should, or not really like it should, but as smart money wants it to work, as the large institutions that have the money to push the charts around want it to work, to get these small institutional, or get the, well, smaller institutions for sure, but it's the smaller retail traders that money, to knock them out of their positions, so that, because basically trading is a game of, hey, I'm putting in my money to take away your money, basically. And that's what happened. And it ran up and touched the breaker. And and that's on the 15-minute. Even if we go to the 1 hour, you can still see the breaker in play. It is, again, if we did a low, high, low scenario, your low would be, I mean, I guess you'd have to get to the 15-minute and know exactly when the high formed. But your low, of course, would be the bottom of the red wick, and then your high would be kind of close to the top of the red wick, the next red wick. So it's pretty much fairly similar as far as the hour is concerned. So it's right there. So it comes up, touches the bottom of that red wick. That would be that low, and boom, you can see it looks like it's setting up for a drop off tomorrow. As you can see, we have look at that. We got these lows here, these lows here. That is some massive liquidity. I want to see what it looks like in a larger setting. Okay, what we got over here? I mean, there's even liquidity points down here that if it wanted to drive down further, it could. Maybe not there. Could even drive itself all the way down to here. Who knows what we could see tomorrow, especially since today's the election day. Generally what happens is that, yeah, you'll see a huge jump in the market day of. Day after is when you see a huge sell-off. That's typically what I've seen when it comes to election days. I didn't have the last year pulled up, but I'm sure, hey, maybe I'll do another video in a little bit and I'll pull up last year's election day, day of and day after, and we'll see what comes up. Maybe, I don't know, but for now, just wanted to show you that 15-minute bearish breaker in action, what it looks like, how to look for it, and that way, in case you are trading, you kind of have an idea of where it's going to get to, or aim toward, I guess you could say, before not exactly turning around, because we don't know if it is going to turn around. It could run straight through this and go toward this. That's why I have this marked off, this volume imbalance. I have a feeling it's going to be running up toward here before the day is over. What is the volume imbalance? That is where there is no, it's basically in between wicks, no bodies, basically. There's no bodies here in between. It's after a session. So the session ends, after a day, a new session starts. Somehow it opens it gaps way below. The wick comes up, touches the wick, and then continues on. But there is no body there, right? Even though there may be, there's two, looks like they're halfway through it, just, a couple, like an hour before that, 30 minutes before that. There is still an opening there where there are no bodies of a candle. So that is called a volume imbalance, and I have a feeling we might be seeing this maybe try to pull back down to, it could be possibly this yellow line here, to where the liquidity line was previously, and then we might see another run up in the afternoon session and hit that volume imbalance. But yeah, for now, that's all I got. Thanks so much for watching. Subscribe if you want to learn more. And I'll try to be putting up more. Have a good day, and go vote.